Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about the office market. We're talking about tenant strategies and investor strategies. Please welcome my next guest is Jim Bacchetta. He's VP with Highwoods Properties. Now, Highwoods is a $6.5 billion real estate investment trust. They have properties in 10 markets across the U.S. And Jim's joining us here in Studio One today. Jim, thanks for being with us.
Thanks, Michael. Thanks for having me.
Well, we appreciate it. And I'd like to get your view as an operator of these buildings around the country. How do you see the current market for tenant demand? We hear there was a little bit of slowdown from Walter in the first quarter. Have you guys seen that? What are you seeing for traffic?
Well, Walter's right. There was a typical seasonal slowdown in probably December through maybe February. Wasn't really alarming to us because we see it every year. But now things have really picked up as usual. And things are rocking along. Demand is strong, traffic is strong, and the markets that we're in 10 markets, they're all tightening, and it's good for landlords.
Which cities are you seeing the biggest increase in occupancy and rates that you're in?
Nashville's on fire. Atlanta is very strong. Our portfolio in Nashville is unbelievably 99% occupied right now. It's just about physically impossible to do that.
Wow.
In Atlanta, we're 92 or so, and I really, though, all of our markets are experiencing tightening, steady increasing demand, and rent growth.
That's good. And what are you seeing from tenants today as far as the amount of square footage that they're coming to you guys for, or when they're discussing renewals? Are they still trying to reduce their square footage per employee, or are you seeing, because of the job market improving and more concern about retention and recruiting, are you seeing any trends there?
There's been a lot of discussion about becoming more dense, and I think
that's what my wife says. I'm becoming more dense.
I hear the same from my wife. But the density trend is somewhat overblown, in my opinion. In our experience, we see tenants that want to restack from time to time, and they want to get more dense, and they go to a more open office plan. But even with those open office plans, you see them come back and add huddle rooms and break rooms and open spaces, and where folks can collaborate, or where they can get away and make a private phone call if they need to. And at the end of the day, you're not really seeing much savings or much more efficiency. But in terms of overall size, the job market's good. There's new hiring going on in virtually all of our markets. And so I don't see a lot of downsizing. About the only time I'm seeing downsizing now is when, as a result of a merger, and a company is eliminating some redundancies in their overhead, and you'll see some downsizing and restacking. But the overall trend is, folks are really renewing and leasing the same amount of space, or even more space, and looking for expansion options.
Okay. And are you seeing any trends, Jim, with tenants today related to the length of their leases? We heard Walter suggest that maybe some tenants would want to think about a shorter term lease, but because of FASB, I think some companies, maybe they're thinking about shorter leases because of the FASB accounting changes. But what are you seeing in the real world as far as that goes?
I think Walter's advice to tenants is probably good, since we are, at least on the upswing and approaching the peak of the market cycle. But I think that we really aren't seeing a big demand for shorter term renewals and leases. In fact, we're doing 10, 12, even 15-year leases in some instances. I think it depends on the tenant. It depends on their business plan. Mm-hmm. It depends on how much growth they want to build into their space, growth potential. And sometimes when you see a market tightening like it is today, you don't really know where the end of the cycle is. And I think a lot of us I feel like the runway is still quite long.
Yeah.
And so I personally, I don't know that I'd want to do a short-term lease, a 3-year lease, because I think this market could run, and be strong for 3-4 more years easily. And so where are you in 3 years? You're going to have to re-up at an even higher rate.
Right. And what's your quick answer to construction costs and the impact there on tenant leases?
Well, construction costs are continuing to rise, of course, and in most of our markets, though, construction costs require rates that are a little higher than the current market rates, and so that's one reason why we're confident that rates are going to continue to rise, because there's still a gap in most markets between rental rates that are existing and what you need for a new building.
Okay. Well, great. Well, stay tuned. We're going to have more on the office market, including the investment market. Get Jim's view on that. Stay with us. I'm Michael Bull. This is the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Valuate. Easily share what-if analysis online with colleagues. Visit getvaluate.com. Welcome back. I'm Michael Ball, and you're listening or watching the Commercial Real Estate Show. Today we're talking about the office market. My guest is Jim Bacchetta. He is with Highwoods. And Jim, I'd like to ask your view as an operator of these buildings around the country, how you're seeing the investment market for the office sector today.
Well, Michael, it's a very competitive landscape for buyers, and we are a buyer, more buying than selling, but activities is slow simply because there's great competition. And cap rates, as Walter mentioned, are in the 5 to 7 range, depending on the property, depending on the status of occupancy and underlying NOI based on your lease-up assumptions as you study these buildings and underwrite them. I think it's not getting any easier to buy buildings, and one thing that I seem to see in most of our markets is that many of the trophy assets, those that are in most demand, have traded, and they've traded to companies like us. We're a real estate investment trust, and our business is all about buying the best buildings in the best markets and submarkets and managing them and leasing them up and clipping a coupon. And there are more and more institutional investors that have acquired the best buildings. And so, if guys like us buy them, they're not going to go back on the market for a long, long time.
Right.
And that's one reason why I think Walter mentioned that activity's down a little bit. He didn't indicate exactly what I just said, but I think that's a factor. Market's tightening, NOI is increasing, rents are increasing, so it's making it harder to buy a building. Because cap rates are coming down as well.
Yeah. When you're in competition to buy some of these office assets, are you seeing a competitive situation with foreign investors? Are you noticing
I have not seen a tremendous amount of foreign investment myself. Now I know it's here, and I know it's in some of the markets, but I sit on a panel that visits with the Fed quarterly, and we saw the exact statistics of foreign investment in real estate, and it's in the U.S., and it's not as big a percentage as everybody thinks. It's here, and it's a factor, but our competitors seem to be the same group of real estate investment trusts and U.S. financial institutions investors every time.
Right. And I want to ask you, Jim, about leasing strategies, because that's always something that's on your mind, right? Owning all these buildings is, what are the best ways to lease these properties? Are you guys doing any kind of amenities or technology that's helping you with leasing today?
Sure, technology is a big thing. I think tenants are expecting Wi-Fi in all the common spaces and areas.
I want it in the elevator too,
The elevator, sure, and amped up cell signals so that you don't drop calls. But I think one of the things trends that we're seeing is lounges, tenant lounges. We like to put training rooms in our buildings, and typically down on the ground floor where the space is not as leasable, so that our tenants can take advantage of that space and not have to build it into their floor plan, and they can be more efficient, and they can use it and reserve it through our property manager. And we like nice fitness centers, food service. You try to bring all the best amenities you can to edge out your competitor.
Oh, that's great. Well, we're in a Highwoods building here. We're our space here on the top floor. So hopefully, when you do the lounge downstairs, it'll be an open bar, right? Just all
For
open.
you, yes.
Okay, great. And then you're right. There's a cafe in this building, and it's real convenient for us. You can, if you're hungry, you're busy working, you're hungry, run down there, grab a bite in your back in your office.
Yeah, and you work out every morning down there too, right?
Yeah.
In our gym.
I have yet to use the fitness center. I've looked at it.
Yeah. Good intentions.
Yeah. Now I work out every morning at home. So every morning. So in fact, I have someone asking me every day when I get here how my workout was. So
that's good.
And ask him how his calls were, and he asked me how my workout was. So it's working well for both of us. Well, what about sustainability? It seems like that it was all the rage. Then the market, I know, was a downturn. People kind of seem to, well, it's not that important to do LED lights, and it's not that important to. But now it seems like a lot of companies, it is a check in the box, right? They want to know that the building's efficient and green.
Every CEO has a different set of boxes to check. Mm-hmm. I think it tends to be on most boxes, though. Mm-hmm. And when we're building a building or retrofitting a building, we always try to get the LEED certification, because it's a box checker, but it's also the right thing to do. Yeah. And we believe in sustainability, and we're separating trash, all that sort of thing. And LED lights you mentioned. LED lights make sense, and we've retrofitted virtually every parking deck that we own. We put efficient new lighting in, and find that the payback is just a couple of years on the investment. So that's quite a return on your investment. It's good for the environment, and it makes sense economically. A lot of these initiatives really do make sense.
The prices have come down, right, on these LED lights?
LED lights have come way down,
yeah.
And so we just can't wait to get them in all our buildings wherever we can, and we see a return. And
they're certainly more comfortable. Like in the studio, we're all LED lights, and we're not here, and we have a lot of light because we're also video in here. But it's not hurting our eyes. Now, if I go into a regular fluorescent light, I'm blinking.
Yeah.
And, so it's better for you.
Far superior, and they're able to tweak and adjust and give you any light spectrum that you want. The technology with LED lighting has just come so far. It's great.
Yeah, it certainly makes sense. And I like when I pull in the parking deck and the LED lights turn on automatically for me.
Yeah.
It just knows Michael Bull's there, right? And it just turns on.
It's just for you.
Jim, thanks for joining us, and stay with us. We'll have more on the office market, including some technology you do want to hear about. I'm Michael Bull. This is the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, commercial real estate asset and occupancy solutions. Visit bullrealty.com. CCIM Institute, commercial real estate's global standard for professional achievement. Visit ccim.com/CRE show. Xceligent, providing verified commercial real estate information across the United States. Visit xceligent.com. Valuate, easily share what-if analysis online with colleagues. Visit getvaluate.com.